All right, everything is looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on March 15th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we got some action in oil. We'll jump right in here and take a look. First, we have TNX. So we did see TNX basically fell off a cliff here and got that back test. And this is what we wanted to see. We had already tested the 200 simple, which had worked its way on top, signifying that the trend was weakening, or at least the momentum was. And then we actually bounced back down to the 200 simple, back up off of it. And then today we actually touched the 200 exponential for the first time. So that is nice. That's something we like to see happen. Both 200 moving averages get touched, just like what we saw recently on Bitcoin on the daily. And that being said, now the knife is down at the bottom of the range. These Stochs are powerfully angled to the downside. So the real question is, are we going to find support at this level and continue to the upside, or are we going to break down from here? Obviously, when we're at the top of the range, we're very close to breaking out. That is our resistance. The same way we're at the bottom of the range, that is our support. And we're close to breaking down potentially from here. And obviously, you know, a lot of that is the fear trade, or the trade that JP is going to cut rates because they broke something. We're going to find out in a couple days, because the fact of the matter is, right now the chart could look like whatever it wants. What's going to happen is the response that we get when we actually hear from Jerome Powell. Right now, this is just people betting, front running the bet. So US oil is next here. So on the daily today, we did something that we hadn't done yet this entire cycle. We just put in a new low, and we did finally come down here. It seemed like so long ago and so much price action, but we did finally touch our support line and also our blue box. So we were able to finally touch tips. We had gotten so close on that last drive down and then consolidated inside the channel, but we were just slowly weakening below the 236, and now we have officially broken down. We hit the target, and you know what? I mean, we perfectly called the top. We perfectly called the bottom. So that's it. I'm not even going to make any predictions. I'm not going to make any calls on what oil is going to do next, because we've nailed it so much in a row. I mean, we're just due to be wrong, so why even bother? We're just going to let that one slide. So that is it for oil. Well, I mean, we're here, so I mean, we might as well shake the 8-ball up and see what she says. I mean, we are here. All right, fine. One more. But after this, I expect this one to be wrong. We're not going to be right all the time, okay? It just, the recent stuff has been easy. So the way this looks to me, we're consolidating below the 200s. We've broken down. Negative slope, very clearly in a bear market. Every time we come up, we put in a lower high and then a lower low. Lower than the previous low, lower than the previous high, just over and over again. The moving averages are both still aggressively angled to the downside with a negative slope. And we just put in the lowest low of this entire correction. So what do I think is going to happen next? Probably just going to consolidate and go lower. Probably will consolidate and go lower. And we see here this little line in the sand for support here. We bounced a couple times, double top, and then broke down below it, and then acted as resistance over and over again. That's that sweet, sweet baby blue. Okay, that 236. That baby blue. So, I mean, realistically, we see very, very clear technical signals coming from this chart. And if we just zoom way back here, I didn't put it at the bottom of the wick just because, I mean, oil went to like negative numbers. So I just picked like a random number based on, I think it was the monthly close. So it's like $20. So we did a fib from $20 up to the top. And obviously it's close enough. I mean, it's at the resistance line. So the 236 is the resistance. So obviously we put it in the right place, so we don't have to worry about that. I'm sure somebody out there put it at negative whatever, or, you know, pick the weekly instead. Well, the 236 works perfect where it's at. So we'll just do that. So that means next target is the 382. So, you know, what is this white line? It's basically nothing. It's basically nothing. It's just a random white line that I drew on here. This is March 2021 top, and then we ran into it again We saw support here. We lost it here briefly when we tested the 200s. We saw support here again. So it just seemed like a likely line that we would touch. So we did it. We touched the line. But that's it. There's no like deeper purpose or anything. It's not some like secret hidden gem. It's just a line that I drew there because it looked like it should go there. So we hit it. We hit the line. We also tested the 886 from the low back here. This was the push down, December 2021. So I mean, at this point in time, you know, this fib is only really useful for one thing. Like we just come down and touch the previous bottom right here. So at this point in time, I mean, we might as well just delete this fib and then we can just put like a line at the bottom right there. Because I mean, we did it. We got all the way back, 88.6% of the way back to it. So if the 886 stops price action this time, you know what? I'm not putting respect on its name. I just said that recently. We're not doing it, okay? The 886 gets no respect. So that means that if this white line is just some imaginary line that I just drew on here that means nothing, that really, from where we're at right now and imagination, I mean, there's nothing else even there. So it has to be the 382. So I'm not making a prediction on oil prices. Obviously, I'm not going to just sit here and keep saying, oh, it's going to go to this next target now and just keep patting myself on the back. But I mean, let's be real. It's going to the 382, which is, oh, it's already our target. We didn't even change it. That was just, we hit the top of the target. So there's still a whole bottom of the target too. So the bottom of the target is like $6. So it could go down a lot more. So yeah, okay. So we don't even have to do anything. So I mean, we might as well just put this fib back on here and the white line and all that stuff. So yeah, I mean, just doing what we told it to. Wow, mind blown. We're getting pretty good at this, guys. I mean, we get lucky a lot. That's a fact. We know that. But man, are we getting good at getting lucky? It's a little wild when you think about it. Okay, so yeah. I mean, we can just simplify this. Everything that we thought was going to happen happened, and the end. Oil. Also, I mean, let's give Biden a little high five for being an excellent oil trader. I mean, if he decides to refill the strategic petroleum reserves now that we're down substantially lower, it would look like a smart move. Not as smart as Trump though. He was trying to fill them up at like $30 and they didn't want to do it. So, all right. So anyway, let's move on here. We'll take a look at TLT. So TLT had that pretty aggressive bounce back to the 200. Same thing again. We didn't touch the exponential initially. We only touched the 200 simple. So I like that we got up there and did that. We did the thing. We'll have to see where it's going to go, though. I mean, it's a very clear resistance. It's a very clear support. And, I mean, as much as you want to, like, get fancy and try to figure out which direction it's going to break and, you know, what this amazing pattern is, it's just a channel. It's a sideways channel. So we're just in the channel. So every time we got to the top of the channel, we get rejected. Every time we get to the bottom of the channel, we get rejected. And then we just trade in the channel. So my guess is, that we trade in the channel some more after this. All right, Dow Jones. So we lost key support, 200 exponential and simple. Looks very, very weak, obviously below all the moving averages now. The real question is when and if we test the lows, or realistically, we're going to test the lows. Maybe we don't get all the way there and we put in a higher low. Maybe we go straight through that low. But along the way, you know, it probably looks like stairs. There's probably going to be some slinky theory in full effect. On the daily, though, very weak. It looked like we tried to reclaim the 200s, and it failed. On the weekly, 821 bear cross, we fell out of bed completely. Measure moved to the downside, double top, as predicted, as expected. High five. Very nice. So the real question is, are we coming back down to the 200 exponential and simple at 30,700? I'm rounding off. Technically, it's 696. So, but realistically, so here's the bull case, is that head and shoulders we talked about. You know, we basically have this pretty clear head right here. We have a pretty clear neckline right here. We have a left shoulder. Right now, if we put in a higher low, we have a right shoulder too. Okay? And we don't want to fight the markets. All right? It's okay to be bullish right here at the bottom. It's also okay to be bearish here at the double top. And you know what else is okay? If this wasn't on a 10-second delay, you guys would probably already be typing. Oh, what's that? AI just texted me. And it said it's okay for a higher low and for this to be inverted head and shoulders. And where's that take us back to? I mean, apparently I deleted all the stuff on the chart, so that's okay. We don't mind starting over every once in a while. Oh, that's not the right one. We don't mind playing the little chart game. Okay, TradingView? You want to play games with us? You want to mess around with our dinosaur? You want to remove our tools? That's fine. Because you know what the beauty of technical analysis is? We don't even have to draw this stuff, okay? The chart's drawn for us. So that, to me, that's an inverted head and shoulders. That's a bullish pattern, you know? Off the 200s, which seems like another likely target. Off the measure move of the double top, which seems like a likely target. So I don't know. I don't know if it's going to happen. Probably just goes straight to zero. Everything's bearish right now. So probably all the stocks and all the cryptos go to zero. Maybe even before the end of the stream. So, which is cool because we'll get to find out live. 14% back to retest the highs here. Roughly 14%, assuming we get all the way down here to the bottom. Maybe we already bottom. And then the measure move breakout from that. You know, and this is probably not going to happen. It's probably not going to happen. And if it does, your stop loss will get hit right before it does. So you're going to miss it anyway. So I wouldn't even bother. But if it does, I mean, we start getting into some moderately juicy targets up here. A little juicy. A little bit of the juice. Let's just assume we get down to the 200s. Let's assume that exactly what we said happens. And we retest the neckline. That's 14%. And then let's just assume that actually the stock market's just ripping and roaring. There's no recession. Everything's fine. Things are fine as the dumpster burns. 36%. So it's not bad. So are we going to put that one in there? Is that our line? Let's do it. We'll slap it in there. We'll slap a little long trade setup on there. We'll see if it plays out. It's probably not going to happen. I wouldn't get too excited. So, I mean, realistically, if we take out the low, we don't want nothing to do with that. We're on the weekly time frame. We're using the 200 as resistance and support. So if that's going to be our entry point, what we need to see from this is at least a 2-to-1 because we're above the 200s. So it's obviously bullish. So we're trading with the trend. So our 14% target, and if we're going to break below the previous weekly low right here, aka the head, I mean, that's 6.5%. So that gives us a 14.5 to 6.5. That is a 2.2 to 1 risk reward ratio. Not exactly amazing, okay? But that's really just to get our beaks wet. What we actually want, we want that thick boy. Oh yeah, we want the breakout. We want the measured move, okay? And that gives us 36%, 6.5% stop loss. So here's the thing. This is the real trade that we're after. So is it going to happen? No, I'm sure Dow Jones is going to fall completely out of bed. It's going to drop 50%. You know, Peter Schiff is going to tell everybody he was right. And whatever else happens. The gold meteor, I don't know if that might be different. But regardless, at 5.6 to 1, it's probably worth a shot. 6.5% stop loss, 36% gains. I mean, how does it happen? How do we go to new highs on the dirty Dow? Oh my gosh, look at that too. What are even the chances that if we Fibonacci from the top to the bottom right here, okay, completely random. I don't like do anything before the streams. Occasionally a thumbnail if you're lucky. But this is not well planned or thought out, okay? You guys get this raw emotion off the cusp. So that's it. That's the 1.5 Fibonacci extension target, which just conveniently happens to be. So realistically, are we confident enough to slap a box up here? You guys want to do that? We'll do it together. You guys earned this for being here today. Both of you guys. Both of you earned this. So yeah, that's it. That's what we're looking for. So yeah, that's our target. If this happens, which it probably won't. We shouldn't even get excited about it. And if it does, it's like, how convenient is it that we just bought the absolute support and then it just straight rockets? It sounds a little too good to be true. But high or low, I mean, that is bullish. So we'll see what happens. It could happen. We should consider it. We don't want to get too bearish. On the monthly, though, man, we had saved this 821 cross and it was looking kind of good there. And I mean, it's just completely fallen out of bed. So it really does look like it wants to come down here and visit the lows. Now, this is still 2 weeks left in the month. 15 days plus 20 hours as well. So 15 and some change, as we like to say it. So realistically, we'll see. I mean, we're going to come down here and test the lows. The question is just how far do we end up going? So the 236 would be about that 30,567 and would line up with pretty much everything, including the entry for that. So am I going to take a stab at the Dow? Does the Dow just always go up all the time? Yeah, I will. I'm going to take a stab down here for that right shoulder play. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. The other indices pretty much look the same. The most important thing, all we really need to do is look at the daily. Are we above or below the moving averages? We're below all four. Not good. What about the weekly? Are we above or below? We're above the 200s still. That seems like the likely target. The 8 and 21 are bear crossing. So not cool, but as long as we're below those levels, it seems like that would be resistance. As long as we're above the 200s, it seems like that would be support. So realistically, what's the range on the S&P? SPY would be like 396. Support would be like 372 on SPY. And then on the monthly, it looks nasty. So we crossed the 821 bearish. We tried to save it over and over again for months. And really what was happening here? Was anybody even really trying to save it? Or was this just distribution taking place before markdown? Yeah, that thing. The thing I just said. Seems likely. So, I mean, not good. As long as we're below these moving averages, the same thing we just talked about, you know, support is basically at the next moving averages. Now, could you just use other moving averages like the 50 or like the 34 or like the 72? Sure, you could. We can create other levels of support along the way, but the obvious one seems like that previous low and then the 200s. Now, again, do we get there? Probably not. Maybe we should be using like the 100 or the 150. But we just use shorter time frames instead of just adding a bunch of extra moving averages. But you can do both. You can do whatever you like. The Qs, NASDAQ, triple Qs. Man, honestly, I'm going to clear my throat real quick. Honestly, on the Qs, we're holding on to the 200s for now. So this actually technically looks more bullish than the other indices we just looked at. On the weekly, but I mean, that's probably just noise because we really did just touch the 200s. So it's weaker on the weekly, but it's stronger on the daily. And it is starting to build up some momentum. There's definitely, you know, we don't want to just bet on everything going to zero, even though it's probably going to happen. The monthly Qs, 3 green histograms in a row. We left the bearish control zone. The blue Stoch is powerfully angled to the, that powerfully word. I know that's like my word. I say that all the time. It's powerfully angled to the upside. This is like, it's like lacklusterly angled to the upside. It's like, oh, I'm kind of going up, but like just a little bit. So that we're not going to give that powerful. This is powerfully angled to the downside. This is lacklusterly sloped to the upside barely. So hard sell when they intersect, or I'm sorry, hard buy when they intersect. We'll see. I mean, this was like enough to put some bullish signals on the monthly, but we're below the 8 and 21. And this is like a real clear rejection. We go to a new low. This is a real clear rejection. So, I mean, my bias is that we at least retest the lows, if not go to a new low. What about the Russell? It went out of business. They just shut it down. All the stocks in it. They just closed it down. Or maybe not yet. They haven't done that yet. The Russell's still alive for now. It is hanging on like a little zombie over here, though. Basically tested those recent lows, which it did real nice here by not putting in new lows. This was our low in June, and then pretty much everything else, major indices wise, put in a new low in September, and that was the macro lows, and then they've put in higher lows since. The Russell held that low, but now it's retesting the low from December. So taking out that low, there's no extra low for it to defend. So it's just going to be at the macro lows. So everything that looked okay on the Russell there for a little bit or slightly better than the rest of the markets looks like trash now. We lost that ascending support line. And you guys know Okay, look, a lot of times I use the box like this for the air pocket. This is the opposite of an air pocket. Air pocket is when there's like no support, no price action. This is a cluster of support because the Russell is such trash that it consolidated in this range for like 1,000 years since I think the dinosaur. Well, the dinosaur is a little further back, but we started consolidating in this range in 2016. Okay, put in the high in 2018, no new high pre-Rona. Okay, so already was performing like trash. Then rocket shipped, distribution, markdown, more distribution, probably another markdown. I think you're right. So probably the 0.5. We're hanging on to the 382. We're hanging on to all those key levels of support. The 0.5 is right smack dab in the middle there. It's also the measure move. If we take this little move right here and then we say, oh, consolidate and then go lower, well, that's it. Boom. Boom shakalaka. 0.5 confluence. Charles Dow theory. Dr. Daddy Dow. $1,541. Seems like the next target. If we lose the 382, maybe we don't. Maybe this holds and we just go substantially higher and all that stuff, but probably not. Okay, let's look at XLF. Obviously, that's popular. It's like the thing to do now. We're like, oh, look at the financial sector and see how it's doing. Spoiler alert, still not good. Yeah, somebody's been coming on here and warning you guys about the financial sector and talking about spreads widening and talking about how banks don't actually make their money with the spreads anymore. Now they speculate on assets, and a lot of speculation took place when rates were really low or mortgages, basically were at like all-time highs, and things have changed since then. So if you bought a bunch of mortgage-backed securities, you tied up all your cash in bonds that were yielding 1%. You gave people a bunch of super cheap loans, but cost of borrowing is now expensive. Yeah, of course you're not doing well. Banks make money speculating. We know that. So it's not the spreads. I mean, now the spreads are actually pretty decent. So now it is the spreads. They're still paying people 0 and, 4% from the Fed. So, yeah, now they don't need to speculate. But, for the last 20 years, we've been driving rates towards 0. So they did. So they're used to it. They're like crackheads. They're on crack right now. They don't need the crack, but they still want it. So that being said, is this a trash sector that's complete garbage that we've been talking about forever? Yeah. Oh yeah. 100%. Definitely. And I mean, people aren't even like defaulting yet. So, we get that coming later on when like the actual consumer is struggling. But this actually just isn't a bunch of like trash banks, which is why it's kind of holding up. It still hasn't even put in a new low. It's threatening it. It probably does. It probably will very soon. It bounced the 382 on the macro. So if it does lose the 382, we're talking about a serious haircut down to like 27. It's at 31 now. Clearly in a bear market. Tried to save the bull market. Double top, capitulation, back down, measure move, retest the lows. Yeah, but I mean, this has got like a bunch of other big names in it too. It's not just like straight up banks. It's got like the financial broadness. It also has like the big name banks in it as well. It's not like loaded up with all these like trash banks. So we'll look at the two most popular banks right now. I guess I could have pulled up Credit Suisse too. We were talking about it in the group, so I will slap that bad boy up on here too. But this is First Republic Bank. This is one of the ones, obviously, that's having all the issues. I mean, this thing was already in a bear market since November of 2021. Broke down, back tested the 200s, got rejected, went lower. Back tested the 200s, got rejected, went lower. And when it went lower, we got the coveted bloody waterfall. That's right, something that I made up. No one else has ever talked about the bloody waterfall unless they watch my stream and stole it. But that's it. That's what a bloody waterfall looks like. Now, this one is particularly bad because it's bad, obviously. You can see that. But I mean, it went down like 85%, had a nice little couple bounces along the way. I mean, this is where you really get wrecked, is in this price action, because it basically gapped down here, went all the way down to like 45 bucks, came all the way back up, and then closed at 82. So, I mean, that intraday like volatility is insane. And then the next day, it's like, oh, that was it. That was the bottom. Look at that rejection wick. Everything's fine. And then gap down again. Did the exact same thing. Just completely, just insane volatility. Then gapped up, melted down, then gapped down, And it's, I mean, you can't really trade this. I mean, you can gamble it. You can gamble this. You could bet on it. But, I mean, but you will lose. You'll lose. Maybe not first try, maybe not second, but eventually. Silvergate Bank, complete meltdown, complete trash. No big surprise there. That was another big one. This thing's been in a bear market officially since back in January of 2022 and has been just melting down since on the daily. And then we just saw that final capitulation, the bloody waterfall. Not too crazy to see a bloody waterfall. I mean, they happen all the time on trash assets. So this one from the low down here, which was the previous all-time low, to the high down here, previous all-time high. And, if you're checking in on the Silvergate short, I know it seemed like I was pretty greedy with this one here at 54%. And then the second trade setup, I was like, oh, I don't know if we're going to get the full 69%. But if we do, and then, of course, the rip-roaring short, which I didn't even get greedy enough on this one. It was 91%. So if you entered in and had the balls to ride Silvergate down, I mean, the 91% wasn't even enough. Okay. But let's not go to the wick. We'll just go to where it's at right now. Let's just say you woke up, you entered this short, and then you forgot about it. You went into a time capsule, and then you just woke up. 97%, not bad. It went to zero. You did it. So yeah, I mean, but I didn't actually take that trade, so you don't have to worry about it. And I would have for sure. I'm super conservative. I would have been taking profits like the whole way down. So yeah, but I mean, you could have done that. You could have shorted these trash banks. But also, I mean, hey, sometimes I'm like, oh, I'm not going to take that trade. And then it does really good. And you're like, I wonder why he didn't take it. You know what? It happened. All right, so let's look at Credit Suisse. Obviously, this one's in the news. Everybody's like, oh, Credit Suisse. I mean, this bank has looked like trash forever. We were talking about it in the group today. This thing topped out back in 2007. Okay, it's been melting down since 2007. It was $75 in 2007. And then its next lower high was in 2009. It was $54. Okay. And then the next lowest high after that, 2014, it was $32. And this thing's below its monthly 200 exponential and simple, and they're sloped to the downside. I mean, how many opportunities did you get to find out that this is complete trash? It's not like it was just like, oh, we woke up yesterday and found out Credit Suisse is trash. I mean, Saudis came in, bought like 10% of it. BlackRock came in, bought a big, thick, chunky piece. And you know what? They were like talking their book as much as they could. Didn't help. Still trash. So here it is. Here's your trash. Consolidating, just constantly going down forever since 2007. So for a decade, and then also some change. Also some change as well. More than 1 decade. Completely melted down. And even before the capitulation out of the bottom of the channel, it was already down 92.73%. So let's just say you were like not really paying attention to Credit Suisse at all lately, okay? Or ever in the last like 15 years roughly. You just didn't even look at the chart at all. You could have looked at it 6 months ago. You could have looked at it right here and been like, hey, this thing looks really bad. Like really, really bad. I wonder who's betting on the price of it. Probably the investors. And it looks like they're betting on it going down because they keep selling. So, of course it's exciting to talk about it now that it fell. But I mean, it was already, before it even dropped out of the channel, it was down 93%. So this is like this last little like 6 or 8 months or whatever that everybody's excited about. It's like, oh, it went down 93%. It's like, now it's down another 62%. What is the difference between the actual 93% that it fell right here, 92.88%, versus now, a couple months later when it fell another 60%, 97. So it was already down 93%, and now it's down 97%. So when it was down 93%, it wasn't bad. Nobody cared about it. Once it's down 97%, it's like, oh my God, this bank, it's melting down. Oh, this is insane. Nobody could have ever seen this coming for 15 years. This is crazy. It was fine a month ago. Oh, technicals just don't lie. They paint a beautiful, simple picture. They really do. So let's look at some other trash, and then we're going to call this because I got some stuff to do. I got some things to do. DXY, the dollar. So bounce up here, retested the 200 exponential, came back down, higher low for now. Had a pretty aggressive move up here when everybody got worried about the rest of the world's financial system. Obviously, they were worried about here. They were like, oh no, the U.S. banking system is trash. And then they were like, oh, the other world too. So we'll see. Back on top of the 821 at the 200 exponential. You guys know my target's at 200 simple. When we get back up to 200 simple, I'm going full oil on this one, okay? If the dollar goes back up to 106.65, don't even ask me where the dollar's going after that, okay? I'm tired of being right. I'm not going to tell you any more targets on the dollar. We'll just assume it goes to 106.65 just because. And then after that, we're just not even going to look at it anymore, ever again. Tesla rolling over, back testing the moving averages. Microsoft still looking pretty aggressively bullish right here. Reclaiming the 200s, one of the few things in these last few days, and holding for now. So, I don't know. Used a lot of energy there. I don't want to get overly bullish on Microsoft. Apple doing the same thing, consolidating above the moving averages. That's where Magma starts to break down a little bit, okay? Because Google is looking pretty rough. Had a nice little move the last couple days, but still just consolidating in that range. Nothing new here, and still substantially below the 200s. Meta, again, strong on top of the 200s. We got the gap up. We talked about the short. Played out about halfway. Again, I don't trade Meta, so I'm not in this one, nor would I be. But that would have been it. You would have come back to your entry, and that would have been the exit. And you would have ended up right back at break even, because this bad boy just put in a new high. So is this going to end up printing some bearish divergence and rolling over? Probably, but I mean, maybe just all the bad news was priced in on Meta, and now it's just good. It's good now. Because efficiency. Amazon, put the A in Magma. Well, I'm in the second one. The one after the first one. Looks okay. I mean, bounced perfectly off the 886. So maybe the 886 does serve an actual purpose, and I should stop busting its chops. It is back at the 786 now, so I don't know. It looks like it wants to come up here and test some support levels. I mean, I don't know. Amazon looks okay. Tech looks decent. Nvidia still looks very strong. Up here at the top of the range, still holding strong. Left that gap behind, and it's back at the top of the range. And like, Nvidia is not just strong right now. Like, it's literally way stronger than just about anything. I mean, it's still down 30% from the highs, from the all-time highs. But, I mean, there's a lot of stuff that's down way more than that. And, you know, realistically, it's relative because it was down 68%, and now it's down only 30%. So, I mean, it's still bad. It's still really bad to be down 30%, but, you know, not compared to 68. All right, let's look at some cryptos. A little crypto connection. What's up, Hex Evolve? Good to see you. Goddamn time change. I know that's right, man. It's definitely messing with people. Still messes with me sometimes. Bitcoin on the daily. So that was our bounce off the 200 simple. We're back up here at resistance. We were talking about this quite a bit in the group also. Essentially, we had this big drive up right here. That big old lady lump, okay? And then we had this slightly smaller lump. My lump, my hump, my humps. Okay? A lower one. But here, we put in a higher one on price action. Ooh, little divergence. Played out nicely, broke down from support, hit our target, took the long, rode it up. All right. So now we got to look out for this putting in another lower high. So we have 1, 2, 3 drives. Now, we don't want to get too crazy here because technically this closed, technically, a lower high than this did. So that is technically a high. That's a lower high. So technically we can't print divergence because we have a lower high on the indicator oscillator potentially and a lower high on price action potentially. But if price goes higher or the indicator goes higher, we will print bearish divergence. But if both go higher, we won't. And if neither one goes higher, we won't. So it's worth paying attention to. Potential third drive of bearish divergence. Very, very clear rejection candle. And then the one that follows, not great. A little more indecision, but bearish nonetheless. And now we got a fresh one. So what happens today is going to be important. Obviously, this was a key resistance. We shot through it. We took out a bunch of people's like shorts, stop losses, etc. But we weren't able to hold that level. But we are still at a decent level. We're above all our moving averages. We still have bullish momentum in our favor for now. But we did take profits on the scalp. Very, very nice, 25%. Congratulations to anyone that took advantage of that. If you didn't, have fun living in a van down by the river. Futures chart, pretty much the same. On top of the 200s, we did put in a higher high on the futures chart. So again, of course, we're going to look for divergences between the charts, not just the one we look at like spot or futures. We also left another big gap down here. So we came down and closed that gap as expected, perfectly to the penny, nailed it. And then we left another gap. So now we have to come back down and close that one. So maybe a couple months later, we'll come back down and close this gap. Maybe sooner. But we did put in a high, then a higher high, then a higher high again. We have a high, then a lower high, then a potential lower high again. The slope line, what did I do? The slope line flipped bearish red slope and then back bullish blue again. So a rejection off that slope, even if we got some continuation in the meantime, a potential rejection and rollover would be that third drive of bearish divergence. Same thing on the knife as well. So, but longer time frames don't look bad right now. The Ethereum chart is very, very similar to the Bitcoin chart. We closed exactly at that high. So if the indicator oscillator does anything but exactly what it did at the previous high, we'll print divergence. So Ethereum a little more clear. Spot Bitcoin chart, not as much. Futures Bitcoin chart, very, very clear right now. So, and you guys know that's where the smart money's at. So we'll be watching, but not in a creepy way. From a distance. No binoculars. Crypto total market cap on the weekly. Just hanging out at the 200s. Neutral. It's between all the moving averages. Try to get above. Rejected. Just consolidating. It did use a lot of energy going from the bearish control zone, hard buy, all the way to the bullish control zone. And it went nowhere. So that's not good. Bitcoin dominance exploded to the upside. Okay. Not only did it explode on the way down when things were dropping, but it also exploded to the upside in the recent move as well. So we go down, Bitcoin gains market cap. We go up and Bitcoin gains market cap. So what does that mean? Are altcoins trash? Is Bitcoin a store of value and people are scared? Is Bitcoin eating trash coins lunch? Yeah, I guess all those things probably. Bitcoin dominance on the weekly with all the altcoins. Bullish, but still trading inside that range. Flat support down here at the bottom, but now starting to form that ascending move. Bitcoin dominance minus the altcoins. Nope. Bitcoin dominance minus the stable coins does not have that same flat bottom. It's got an ascending bottom. And we're not trapped in that same kind of channel. Matter of fact, we just did something that we've been watching in the group now for a few weeks now, which was this little coil up consolidation in this tiny little triangle. And now we're breaking out of it. Now we haven't closed out of it yet, but we did already put in a higher wick. So the real next area of resistance is basically right here. So we'll see how this week's closes. Probably is a higher high and a breakout. And then after that, the likely target for Bitcoin dominance minus stable coins is 56%. 56%. The likely next resistance. After that, it will probably immediately reverse and go straight to zero, as do all things. So yeah, we'll put an orange line there so we know. Matic. Okay, so the Matic trade played out pretty nicely. It was a quick little scalpy scalp for 27%. Congratulations to anybody that did that. Already sold off like half of it, so it's probably going to go straight to zero. Should have sold it all, obviously. In hindsight, obviously. But yeah, I kept part of it open. Got a little something still in the game there. Basic attention token, back testing the 200s, rejection very weak. BNB looking okay, reclaiming the 200s, fairly strong. This thing just feels like it's just hanging on by the edge though. I mean, it's back at the heart line of the ascending channel. It's back on top of key fibs, the moving averages. Looks okay. Looks okay. There's a lot of worse looking cryptos than BNB coin right now. All right, gonna rip through these last few. So gold at the top of the channel again, just absolutely crushing it. This is definitely the fear trade. Here we saw a single blow off top. Here we saw a blow off top followed by a lower high top at resistance. Here we see a little V blow off top type scenario. Not really blow off top, but pretty sharp top. And now we're back testing it. So maybe we come up here and take out this previous high and just fake everybody out really bad. Maybe it's already topping. Maybe we break out and just go to the moon. But I would still be very, very careful, because when we're at the top of the channel, we go down. We're at the bottom of the channel, we go up. We're at the top of the channel, we go down. We're at the bottom of the channel, we go up. So when we're at the top of the channel, more likely than not, we go down. Let it go down. Silver looking okay back on top of the 200s. I mean, it's just going to do what gold does, but not bad. It's not at that same resistance, but it looks okay. So CAT had the meltdown, broke through that key support, finally hit the measured move. All right. Now the next thing we got to pay attention to is not really a blue box. It's a borrowed box. Okay. And that's that gap from way back when. So now suddenly we're running out of support. We got 200 exponential. We got 200 simple. After that, gap gets filled. 198 on CAT. So it was all the way up here at 266, looking about as bullish as it gets. And then lower high, rolling over, meltdown. So we'll see. We'll see. Dow Jones, obviously, that industrial narrative. Deer, same thing, broke down pretty aggressively down to support. So this is it. I mean, if we can't hold this level of support, we got to look for a deeper retrace. But it was very important losing that ascending support line. Still holding on to the 200s for now, but this is literally the line in the sand. UNH continuing to melt down at the 886. Oh man, as I say, the 886 has no clout and no one cares about it and it's just complete trash. It's actually like a little crutch for a couple things right now. So UNH, the #1 Dow Jones stock by size, market cap, weighting, all that good stuff. Hanging on to the 886 by a thread. So we did see GSG break down. Finally got the little measure move breakdown. Little gap. Got bought up a little bit. We're about halfway through the move. So obviously we want to touch tips with that little blue box, aka that yellow support at 1811. Starting to look like buyers around that range. LNG. So you guys know, obviously, we played around in the fundamental ball pit and we got smacked down because this thing gapped up and just ripped. I was still betting on downside and we got it. We got the downside. We gapped through the other gap, but now we're back down here at the lows again. So it was just a little fake out, a little tricky accounting. Yeah, probably. Shell completely fell out of bed. Lost that long-term resistance that could have potentially acted as support, and it didn't. We gapped down through it at the 200s. So pretty much everything is like testing, potentially losing the 200s. So we're really at that same level again. Mosaic, same thing. We talked about the descending triangle. We talked about the fake out, breakout, descending triangle. And now here we are back down inside of the original triangle, revisiting the lows. And what is it? A trick. Because a lot of people got tricked right here. Thought we're breaking out. Thought we're going to new highs. But what really happened? Just a beautiful test of the 618. A perfect test of the 0.5. A little tricky fake breakout right here. And now here we are revisiting the bottom of the range. And if and when we do get that breakdown, we know we've got the blue box as well as a yellow support line, which also lines up with the 200 moving averages on longer time frames. Seems likely now too, doesn't it? Up here it was like, oh, we're going to the moon. And I was like, you didn't say the magic word. And denied. ACB, new lows, breaking down the lowest ever load. If you ever bought ACB ever in all of its existence as a publicly traded company, you are a loser. Unless you bought it today. And then, well, ask me tomorrow, because honestly, you're probably just a loser. You haven't found out yet. So yeah, that's it. 1.236. You guys know I'm expecting this to go all the way to 0, but potentially could stop at 1.618, 17 cents. So that's what I'm looking for. Now, could we get a little buying opportunity about 48 cents or possibly 29 cents? Yeah, I don't want to get too greedy with it, but also you don't want to ever get stuck holding these things because it's really it's a hot potato. But instead of burning your hand, you just lose all your money. Tilray trash as well. Man, we did it, right? We talked about it forever. You guys know how I feel about Tilray. We've been sitting on the sidelines just patiently waiting because I just didn't want to feel like anybody else ever got a better deal on Tilray than I did. And you know what? We did it. We went lower than the lowest low ever on Tilray. So now that we did it, that was my next criteria before I would buy Tilray. I'm not just going to immediately buy it now. No. I'm going to look for probably the 1.236 Fibonacci extension. So maybe $1.18. Ooh, that's another 50% from where we're at right now. I mean, there's nobody left that believes in Tilray. We know that because it's the lowest low it's ever been at. So I don't think calling for a 50% drop bloody waterfall is too out of the question. I don't want to be greedy on this one, but maybe. So we'll see. We'll slap a little rectangle on the chart. We'll see if we get it. We'll see if we get that Tilray $1.20. Okay. But remember, this isn't just a buy it at $1.20 and hodl it. We're talking about some scalp moves here. Obviously, don't trade this because you'll just lose all your money. URA. So we did see some of the uranium stocks revisiting the lows here. We did break down from the wedge. Obviously, we talked about quite a bit how the red resistance is the strongest and the white support is the weakest. And what happened? The white support broke. We broke down from it. We're testing key fibs. We're revisiting the lows, the lowest lows of our retracement. And, again, like we said, obviously, quite a bit. If we just take that white support line off there now that we lost it, what does it really look like we're doing? We're just consolidating between red resistance and blue support. So more likely than not, we're coming down here to revisit our blue support. Maybe even touch tips with the old blue box down there. I mean, we don't get too excited, but tip touch incoming. NEO is next. Obviously going to zero. Hasn't gotten there yet. It's on its way, though. It is at $8 at the 0.618. If we lose this area, maybe this is the bottom. This is it. This is what I called for the bottom. I said, look, this thing's going to get absolutely wrecked. We're going on to the 61.8 buying opportunity for NEO. So maybe this is it. Maybe this is the absolute bottom. But also, it could go to the 786, so $4.46. So, I mean, do we want to try to pick the bottoms on these things? Do we just want to, put in some buy orders at, the 618 and some at the 786? I mean, there's lots of ways to trade. But I'm not going to teach you how to trade. Not on this stream. Not right now. BABA. Okay, so this is really similar, kind of similar to the Dow Jones chart we looked at, where it could potentially be making a bottoming pattern. It could very easily just break down from here, not make a bottoming pattern, and just continue towards zero. It's been doing a really good job at going from high up to closer to zero, always. There's some hiccups along the way, but it always manages to get just a little closer to zero. So should we think that this time is going to be any different? No. It's probably just going to keep going down here, keep going down, and then soon it will be in the 50s. Which is really, really bad. Really bad. Because that's sort of the lowest it's ever been. So it's borderline Tilray if it gets back down in the 50s. We'll see, though. Could be a nice little trade setup right here. So that's it. Yeah, that's all we want to look at today. All right. Made pretty good time there, too, didn't we? This might be the shortest stream we've ever done. Intentionally. Because I did have the one where it just stopped working after 20 minutes. What's up, Crypto Deli? Good to see you. Of course, man. Yeah, definitely. Thanks for tuning in. Thanks for being the only one. No, I'm just kidding. I'm just kidding. Hex Evolved and random user number 123. All right. So, yeah, remember, obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'll see everybody in the group. Appreciate everybody tuning in today. We'll put out some more static videos. We'll see you on Sunday. Remember the time change, or you will miss the first hour of the stream, which in this case would be the whole stream. So if anybody gets here in 12 minutes and they miss the stream, that's why. So future person that's going to watch this later on, that's why you missed the stream. You had it and you blew it. But yeah, that was fun. All right. Technical analysis, Crypto Trend Trader with our midweek market update on March 15th, 2023. And the official time of the end of the stream is 8:51 p.m. Eastern Standard Time. Not to be confused with 9:51 p.m., which was this exact time about a week ago. All right, later. Everybody have a good one. Guinness Book of World Records. Yep, that is technically it is. All right, later, guys.